Let's get our viewers on board and let's figure out their queries for the financial portfolio. For this, today I have with me Hemant Rustagi from Wise Invest. Hemant, good evening and welcome to the show. And let's take our first question. This is from Balvi Ganesh, and he is from Bengaluru, and he has a portfolio of 2 lakh rupees. He is currently investing in UTI Nifty 50, DSP Nifty Next 50, Edelweiss Flexi Cap, Kotak Emerging Equity, Edelweiss Equity Savings, and Kotak Equity Savings, and he's planning to accumulate 2 CR in almost 17 years, and he wants to understand if this particular fund mix is good for him, and he also wants to ask if he can continue in Kotak Mid Cap or switch to Edelweiss Mid Cap Fund or any other mid cap fund.
Yes, Kavita. I think if you look at the current SIP is around 25,000 rupees and the time horizon is 17 years. So I think if he continues investing through the defined time horizon, he should be able to accumulate a corpus of around 1.75 crore, which means that there is going to be a shortfall. So he needs to kind of increase his SIP by 5,000 to get to his target of 2 crores. So that's the first thing that I think he needs to do. Luckily, I think he has a long enough time horizon here, so he should be able to add this amount to his existing SIP amount. That's the first thing. Second, I think he specifically asked about Kotak Emerging Equity Fund. Look, it's actually in the mid cap category. It's a quality fund. Every fund goes through a phase where maybe it slows down a bit, but I've seen uptick in the fund again. So my recommendation would be that since the portfolio is a quality portfolio, he should continue with that fund in the portfolio. In fact, I would say that looking at the time horizon, I see 2 equity saving funds in the portfolio. One is Edelweiss Equity Saving, the other one is Kotak Equity Saving, where he's investing 2,000 each. So obviously, for a time horizon like 17 years, when you invest in an option like equity saving, which has restricted exposure of maybe 25-30%, it doesn't really work out well for you. So my recommendation would be that we should stop SIP in these 2 funds and should include a fund which is suitable for this time horizon, which could be Motilal Oswal Large and Mid. That fund is actually doing very well. It invests in the top 250 companies in the country. So I think that is going to be the right inclusion in the portfolio as against 2 equity saving funds.
All right, so he needs to stop SIP in Kotak Equity Savings and Edelweiss Equity Savings, and he really needs to keep reviewing his portfolio and an SIP of almost 25,000 per month. All right, we move on, Hemant, and the other question is from Bangalore again. It's from Ben. He needs to know whether investment plan is good enough or not, and he's not so disciplined and always quick to switch the funds. He's been investing in mutual funds since 2019 and previously heavily invested in small cap and mid cap. So he decided to invest 42,000 SIP into 7 mutual funds. 3 are ELSS, 2 are retirement funds, and 1 is a money market fund. And he is investing 6,000 each into all of these funds. And till date, he's given the amount how much he's accumulated in each fund. So he says that Canara Robeco LSS is almost 2.1 lakh, Quant LSS he's accumulated almost 1.5 lakh, Parag Parikh LSS is almost 1.5 lakh, HDFC Retirement Equity he says is 1.2 lakh, ICICI Retirement Equity LSS is 1 lakh, HDFC Money Market 70,000, SBI Liquid Fund is 60,000, total is 8.8 lakh, and he will do a step up of 5% and expect 12% returns, and he also has a 50,000 fixed deposit for emergency fund, 25 lakhs in health insurance, and almost 30 plus lakh in gold. He plans to hold ELSS funds for almost 16 years, and it's actually the goal is for child education is the ELSS funds are directed towards the child education goal. Retirement fund will not be withdrawn now, but then he wants to do an SWP later on, and he wants to invest till almost 50 years, which is more 16 years from now, and he is not comfortable with small or mid or vanilla large cap. So yeah, he wants to understand if his approach is right.
Well, Kavita, let me begin with the positive aspects of what I can see gather from his portfolio. One, he's investing through SIP, which is obviously a very smart way, especially when your time horizon is 16 years, is investing around 42,000 per month. He's committed to kind of step up this SIP amount by 5,000 every year, which again is something great because that helps you to accumulate a much larger corpus and also allows you to benefit from power of compounding. So I think in terms of strategy overall, I think he's done well. The only important aspect that he clearly mentioned is that he has the habit of, or he has been changing his portfolio quite often. So I think that is not something which is good for the portfolio. While SIP, ensure that there is a discipline in your saving and investment process, it's equally important to be very careful in terms of your asset allocation and also the kind of funds you have in the portfolio. So one should always go for the fund which have consistent performance track record, which are not very aggressive, so that you have to kind of make changes in the portfolio every now and then. So that's something I think he should avoid. Another important thing is that he has built an emergency fund, which is 50,000, which is in bank FD. Plus, I see that there are two SIPs in money market and liquid fund of 6,000 each again. Maybe that can be utilized as an emergency fund, but for his time horizon of 16 years to invest in a liquid fund, money market obviously is not a great decision. That is the area where I think he needs to make a change. There are three ELSS funds that I see. I don't think he really requires three funds. Maybe at the most he can keep two, which is Canada Tobacco ELSS and Quant ELSS. The third one is the Parag Parikh. Maybe that he can continue whatever he has invested, but the fresh money I think he should allocate to only two funds. Again, like I said, he needs to relook at how much he needs for his emergency fund. If the amount that is accumulated through the money market fund, liquid fund, and the bank fixed deposit is enough for his emergency fund, that he should allocate this money for a longer term horizon. So while he has said he doesn't like large cap, plain vanilla large cap or mid cap and small, but I think these are three important segments of the market. He has to be in some category which gives him exposure, maybe like a multi cap and a large cap. He can look at HDFC large and mid and Motilal also large and in place of the money market fund and the liquid fund. So I think that will kind of complete his portfolio. He has two retirement funds. He can continue that because the time horizon is 16 years from now.
All right, let's move on and let's take up Sridhar's question. He's from Bangalore and he's been investing in a couple of funds for a purpose of retirement. I think he's on the phone line also. Sridhar, hi, good evening. You're calling from?
Hi, ma'am. I'm Sridhar. I'm calling from Bangalore.
Sure. All right. So as per the details given by you, you want to invest for 20 years and the goal is retirement and you want a corpus of 10 CR. You've got three funds from Quant, which is large and mid cap, small cap and active. You've got SBI Contra. You've got Motilal Oswal Business Cycle. You've got Motilal Oswal Micro Cap Index, Motilal Oswal Flexi Cap also. Current SIP is 50K and corpus accumulated so far is 6.5 lakhs. And you can do a step up of 10% every year. Is that all? Do you want to add any other information?
No, you have spelled it correctly. I was doing for 45,000 until last month, and only last month I've added one fund called Motilal Oswal Business Cycle Fund. So
sure.
At the moment it is 50,000 as you said. That is 50,000.
Hemant?
Yes, Kavita. I think two important things. One is the time horizon, which is 20 years. The target is 10 crore. The current investment is 50,000. And if I consider that, as well as the money that has been accumulated so far, so if he continues this process for the defined time horizon of 20 years, I think he should be able to achieve his target. In fact, even if I look at annualized return of 12%, he should be able to accumulate 10 crore 30 lakhs. So I don't see any problem in him achieving his target, provided he continues this process uninterruptedly, irrespective of the market conditions. So I think that's something very important that he needs to focus on. If I look at the portfolio, there are three funds from Quant Mutual Fund, there are three funds from Motilal Oswal, and one from SBI. From SBI, this is SBI Contra. You can continue with that. From Quant, there are three funds. One is a large and mid cap, then there is Quant Active, and the third one is a small cap. My belief is that we can continue with the small cap and the large and mid cap. But in multi-cap category, which is Quant Active, I think there are better funds. So, for example, if he looks at Kotak multi-cap fund, I think that can be a better option. So one change out of those three In the Motilal Oswal, he has a micro cap fund. Since the time horizon is 20 years, if he is aware of the attendant risk of investing in a micro cap, because he also has small cap, maybe he can continue, but obviously that makes the portfolio a bit more aggressive. For the remaining two, there is Motilal Oswal Flexi Cap and there is a business cycle. My recommendation would be that you should club the money which is being invested in the business cycle into Motilal Oswal Flexi Cap. Should just keep one fund which is Motilal Flexi Cap, because the good thing about Motilal Flexi Cap is that it's a Flexi Cap in the true sense. The allocation that you see to all three segments, you don't really see in many funds, because most funds have a bias towards the large cap. This is a fund which invests across all three segments. So I think a couple of changes in the portfolio. And like I mentioned earlier, if he continues his investment process uninterruptedly, he should definitely be able to achieve his target.
निकाल move on, and Hemant, let's take CB Arvind's question. He says that he's 30 years old and would like to leave a substantial amount, almost 100 CR money for his kids. And investment horizon for this particular purpose is 20 to 30 years, and he has no loans, inheritance of about 50 crore plus in real estate. Currently investing in 4 mutual funds: HDFC Flexi Cap, Direct Plan 10,000, ICICI Pro Equity and Debt 10,000, Canara Banco Illicit Tax Saver 10,000, Nippon India Small Cap 10,000. He wants you to review his portfolio and any suggestions from you that could lead, towards accumulating the corpus of 100 CR for him.
Kavita, the good thing about SIP and investing in mutual fund is that, if you give yourself enough time, if you choose your funds well, and if you invest the required amount by assuming annualized return and then work out, I think you should be able to achieve any target. In this case, he has a time horizon of 20 to 30 years. I think ideally he should be giving himself 30 years to get there. His current SIP is 40,000. But obviously, the amount that he needs to invest is much, much bigger. It should be 3,20,000. Even though the time horizon is 30 years, I assume annualized return of 12%. Obviously, the expectation can be of much higher return from 12%, but I think it's always good to have realistic expectation from your investment. So in that case, he needs to invest 3,20,000 rupees. Out of the existing funds, I think more or less the funds are okay, but there is one ICICI Pro Equity and Debt, again a great fund in the aggressive hybrid category, but not suitable for a time horizon of 30 years. Maybe he can look at ICICI Pro large and mid cap. I think that will be a better option. In addition to that, since he needs to increase his investment amount as and when possible, he should be adding some more categories like mid cap and a multi cap. I did talk about some of the funds like Kotak multi cap in the mid cap category, maybe Motilal Oswal mid cap. So these are some of the funds that he can consider as and when he decides to increase his investment amount. But surely he needs to do that as soon as possible.
All right, that will be all. Thank you so much, Hemant, for being on the show today, helping our viewers with the suggestions for their portfolio queries. And I'm going to leave our viewers with our WhatsApp number and email ID. Thank you so much for watching. Goodbye.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.